We found 3 unusual trades, one of which was worth $19 million on Affirm stock, ticker symbol AFRM, on the last trading day. And what's also very unusual is that Affirm reports earnings next week on August 28th after the market closes. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Affirm for earnings. Are they bullish and buying or bearish in selling? Because as we all know, the rich have more access to information, sometimes leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. Now, as you can see from the charts, Affirm has been on a long-term downtrend this entire year. And we are currently trading at the top of this trend. So will we break out of this trend from earnings, or will we simply get price rejected down lower? Because that's what most technical analysts would conclude, that this trend will continue to go downward. Because as we all know, the trend is your friend. But if you've been following our channel, the data is our friend. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, 7,646 contracts were being traded at the same time for the September 20 options at the 32 strike calls and the 25 strike puts. So let's take a look at the option chain to find out more as to what this wealthy investor is doing for this first unusual trade. So September 20s, we can see at the 25 strike puts, we have an open interest of 6,864. This is less than the 7,646. So it would not be possible to close out of 7,646 contracts if there was only 6,864 that were opened. So therefore, those trades were opening trades because it's greater. And when we take a look at the call side for the 32 strike calls, only 155 open interests. So again, it's not possible to close out of these 32 strike calls because we only have 155 and they were trading 7,646 contracts. So both of these contracts were opening trades, and based on our analysis, they were buying the 32 strike calls but selling the 25 strike puts. And so when we analyze this trade, we can see from the risk profile here that this strategy is actually a long strategy. The share price is on the x-axis, and so as the share price goes up, profit increases more positive. If it goes down, it becomes more negative. So that's a loss. So this is a bullish long trade. Profit is on the y-axis. Note the zero break-even line here. And so when we take a look at the Greeks, we can see that the delta is positive. So another confirmation that this is a bullish long trade, because if it was a short bearish position, it would be a negative delta. Now keep in mind, this trade is hedged. Notice how the blue line is flat, meaning their losses are limited all the way to the $25 share price because they sold the 25 strike puts. And by doing so, we can calculate the total buying power that this wealthy investor would have had to make this trade. And so when we take a look here and calculate this out, by selling the 25 strike puts, they are essentially saying they're willing to own 100 shares at the strike price, selling cash secured puts. So each contract requires $2,500 of buying power. And since we had a total of 7,646 contracts right here. We multiply that out and we get $19 million of buying power required for this trade. But keep in mind, this is a higher risk trade because for one thing, you can see this unusual trade here in puts, which could actually be bearish. So that is why we also hedged for our earnings trade. But if you want a lower risk, higher probability of profit trade, then make sure to go to our website. We'll put a link at the top here where we share better stock picks based on stronger data. Because not all trades that wealthy investors are in will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on this type of data analysis, then we can become more profitable in the long term. Now, as we mentioned, this trade here in puts, what is this investor doing? So let's analyze the second trade with 1,500 contracts in puts. For the September 6th, we can see that at the 25 strike puts, an open interest of 292. So this is less than the 1,500. So we know these are opening trades. And you can see our position here. POS stands for position, and red means sell. And so based on our analysis, they were selling these 25 strike puts to open. And that is what we also did. But we use position sizing to manage our risk. Now, let's take a look at the September 20 options. And we can see at the 25 strike puts, open interest of 6,864. The same options that were being traded for the first unusual trade. And because this 6,864 is greater than 1,500, it is possible that those 25 strike puts for this 1,500 contract trade was a closing trade. So be aware of the risk with following this trade, which is what we did. And so you can see here our position. And so we bought these 25 strike puts, which actually creates a strategy known as a calendar spread. And so when we analyze this trade, this is actually a bearish trade. And we can see as the price goes down, this trade becomes more profitable, reaching max profit of $155 per trade. And we can confirm this by taking a look at the Greeks. The delta is negative. So it is a bearish short position. Now, because the value of this trade is not as high as the first trade, we are still leaning bullish for our overall strategy. And that is why not only did we have this hedge, you can see at the 32 strike calls, we have a buy position here. So we also have these 32 strike calls that we bought to open. And so when we add this to our trade, you can see what our strategy looks like over here, where the share price of Affirm goes up, it becomes profitable. If it goes down, we will be at a loss. However, we are hedged because you can see that the loss is reduced. You can see here our loss on the blue line over here is negative 63. If we drop down to $25, or if we drop down even more, it is around this price level. The loss is much less than if we did not have this calendar hedge. You can see if we were trading around this level, you can see the loss is a lot greater, a negative 238, which is the entire cost of the trade for our long calls here. So you can see the value of hedging with these puts, where we can reduce our risk to increase the probability of profit when we trade, especially for earnings events, which are higher risk. And even with these puts, we are still going bullish long on Affirm, because you can see our delta is still positive. Our net positive delta on this trade, because we are going long bullish, but we are hedging to the downside to reduce our losses because of the higher risk from earnings. Now, we mentioned there was a third unusual trade that was not very obvious on the option time and sales tape. And so this was the third trade. It was a longer term trade for June 2025 options. Notice here at the 50 strike calls, 7,847 open interest. And if we take a look at the trades at this option for June 2025, notice at the 50 strike calls, there was only 1,700 open interest. And so the fact that those trades added to the open interest here means that they were opening trades. And that is why it's called open interest, because they are interested in this strike price and opening new positions. And so that is why we are also in this position, buying these longer term 50 strike calls that expire next year in June. And so when we analyze this trade, you can see that it is also a long bullish strategy that increases in profits as the share price goes up, and it is a loss if it goes down. And we can confirm this with the positive delta. And so based on our analysis of all three of these trades, we are going long bullish on Affirm, because the wealthy investors who could be possible insiders are also more bullish than they are bearish. But as we mentioned, this is an earnings trade, so there is higher risk. So we use position sizing to manage our risk. We put most of our capital in the trades that have lower risk and a higher probability of profit. If you want access to those, we'll put a link at the top here to our website. Let us know in the comments below, do you think Affirm will continue to go down lower after earnings following this trend down, or will we break out of this trend? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.